winner on the Dow today was Apple, and Intel was the biggest loser. Over in the S&P, Activision Blizzard was the biggest winner, while AmerisourceBergen was the biggest loser. Michael Santoli, this was a reversal today. We actually started the Dow down triple digits, and then we ended up triple digits. What drove this action?
You know, it's interesting. It's very hard to isolate any one trigger. Right around 11 o'clock in the morning, New York time, and it was global, by the way. I mean, emerging markets bounced, U.S. stocks bounced. It seemed like a few days of pressure when the S&P kind of sat around the levels that, were the old highs from way back in January, and it seemed like enough. You did also have Treasury yields lifting and kind of getting released because the European yields went up a little bit too. So banks were okay. Honestly, market just sat there after that. I think this market continues to be encouraging in the abstract. You look at the indexes and say, well, we're just 1% below the all-time highs. The uptrend is holding together. But half of all stocks were down today. There are more stocks down than new lows than new highs. So it gives enough for the bears to stay cautious as well. It's kind of a wait and see.
Michael Block, I guess Apple was flattering the overall indices today somewhat.
Well, yeah, it was, because tomorrow is the big day. We get the new iPhones, we get new iOS, we get new Macs, we get everything. We get the Apple can opener, whatever we're going to get tomorrow. So it's a little bit of excitement there. There was some doom and gloom in tech coming into this, and you mentioned Intel top of the show, so maybe the semis still have some room to the downside after the Citi conference last week. But no one wants to stay short Apple, and everyone wants to load up on Apple ahead of the excitement. I'm afraid that people doing that may be barking up the wrong tree here. Every time Apple comes out with these new products, sometimes it turns into a damp squib. The analysts come out and try to make a name for themselves and say, well, my checks out of Asia say the parts for this new iPhone aren't coming in. What they don't tell you is the part orders for the other iPhones actually look better. That's what happened with the 8 and the 10, if we recall last time. Maybe that's what's going on here, but given how I think things play out, tech could have more downside here. I'm calling this a dead cat bounce today. Mike pointed out the issues with the advanced decline. I agree with that.
But Mike Santoli, it's fair to say that we do continue to shake off declines around the rest of the world, whether we're looking year to date, month to date, day in, day out. And Jim Cramer mentioned this again in the 9:30 that Europe closes and the U.S. finds space to rally.
Yeah, that worked again today, absolutely. I mean, look, there's still pressure in various parts of the world. When it gets relieved or when the U.S. market can look beyond it, then that divergence remains. Yeah, I don't think you would ever say that there's an inflection point that the U.S. market is kind of spent here, but you also can't overlook the fact it's a very selective market, what's working and what's not. It's not all inclusive. And, you have boom time numbers in the current economic data, and it's not in every respect reflected in what the market has to say.